As we've emphasized previously, if you create an invoice in QuickBooks, you must also receive payments. There's 2 steps in that process. You write an invoice, and then you receive payments. What happens if somebody pays us in full at the time of the sale? If that's the case, then we create a sales receipt. We don't have to receive payments when issuing a sales receipt because we can record both the receipt of the payment and the sale in the same transaction. When should we enter an invoice and when should we enter a sales receipt? The answer is very simple. We create an invoice if somebody still owes us money after the transaction is complete. If they make a partial payment, we still need to create an invoice because that payment needs to go into our accounts receivable. On the other hand, if they pay us in full, we create a sales receipt. Both invoices and sales receipts are entered the same way, except the sales receipt records information for the invoice, the sale, and the receipt of payment all at the same time. We'll demonstrate how we create sales receipts. Let's look at one that's already been created. This is for Bridget Keenan, and she bought some ceiling fluorescent lights. The payment method indicates that she paid us with a check number 1245, which we need to record in order to complete the payment receipt. Where is that amount going to? Again, this depends on how we have established the payment method. In this case, it's going to be deposited into the checking account. This deposit to field indicates that when we created this receipt, we didn't select the undeposited funds as a default deposit to account in our preferences. If we turn that on by going into Edit, Preferences, and checking that option, that deposit to field will no longer be there when creating sales receipts. But for now, we want to focus on this deposit that's going into the checking account. We enter items the same way, and it includes the taxes and everything else. One side of the transaction indicates where the money is going, in this case to the checking account, or in most cases it would be to undeposited funds, and the other side of the transaction is found over here where the item detail is. Remember that we can see more detail in this transaction by pressing Ctrl Y. In doing so, we find out that $102.65 is going into checking, $95 is coming from materials income, and sales tax payable of 29 cents is going to the City of East Bayshore, and $7.36 is going to the State Board of Equalization. So this money is not going into undeposited funds. It is going directly into the checking account. We'll close this report and click on Save and Close. If we want to create a new sales receipt, QuickBooks will not ask us where we want to put that money because we have set the undeposited funds account as our default deposit to account.